Hey guys, welcome to the second mentorship call. It is September the 17th. So I'm Jamie.
Pads and pens out. I hope you can hear me fine, guys, because I'm actually on holiday right now. Um, but yeah, let's go on to the second call where we're going over. Um, we are this call going over the mega trades, October low mega trade, and how to use open interest. So yeah, let's go on with it. Jamie's going to go over first, I think. That's about right.
Yeah.
And then I'll get into the mega trades on the indices, and then Jamie will finish up. So let's go on with it.
Alright, let me start sharing my screen. Okay. So, let me just admit someone. Okay guys, so this was the PDF that I shared in the Discord. Um, so let's go over this and how you can start using these charts. So as you can see here, we have the Australian dollar. Now you can see around the middle of March, the Australian dollar tends to make a low and then it rallies from there. So if I go over to the charts, and what I'm going to do is I'm going to go on to the Australian dollar futures contract. So this is not like a forex pair. This is just the Australian dollar on its own. Now, obviously, this red line here, later on in the mentorship, in a few calls, we're going to teach you about liquidity and how liquidity is used in the market. And that is what this red line is showing you here. So there's liquidity under this red line. And as you can see, we take out this liquidity here. And then we do that in January, going into February time. And then we rally from there. And then on this down candle just over here, you see this down candle just here, that starts March off, and then we come down, and then on the 15th of March, just like the seasonal tendency shows us, about around the middle of March, it comes down. Now this blue line here is something called an impulse block. Again, we're going to teach you that later on in the mentorship. It's just one of the concepts that we use, and as you can see, it hits that impulse block around the middle of March, the same time the seasonal tendency tells us the market is going to go up. And then look at the reaction. Once it hits that at that time, it rallies from there. Now, obviously, we have buy side liquidity just above these highs in here. Let me change the color on that. And you can see it does it very nicely. Now, look at the reaction here. It's not slow, it's very fast. And look at how many up candles there are compared to down candles. You can see it's very bullish, it's expanding very quickly. Now, as we get very close to the liquidity pool, it starts to consolidate. This is usual. We expect this type of thing. It's basically just trapping people and then a sudden just whiplash, bang, knocking them out. But we're using the seasonal tendencies to kind of give us. So what seasonal tendencies are they're generic price moves that generally occur. Now, they don't have to occur every single time on every single market every year for the rest of your life. Like that's not realistic. But when it lines up with the technicals, as you can see here, like these are concepts that we're going to teach you later on about liquidity and then the impulse block, and it does it at the time that we expect it. You can see it's all blending together, um, and that's what we want. And when it does this sort of thing, that's when it makes these sorts of trades very high probability. Now this is very good for all types of trading. If you want to be a swing trader, this is good. If you want to be a day trader, this is good because it gives you the daily bias in which you can, when it comes down to this impulse block, we can then expect it to be bullish from there. Um, Now, I don't know which trading style you guys want to go down, whether you want to be, day trader. I'm presuming the majority of you want to be day traders. And again, this can help you very nicely. Now, obviously, there are other seasonal tendencies that tell us that the market isn't going to move very quickly. Oh, we got a chat. A day trader, yeah. I'm pretty sure most people want to be day traders. We're day traders ourselves as well. And some of the stuff that we're going to be teaching later on does help with day trading as well. Um, so yeah, seasonal tendencies. Obviously, this one is one that shows you when the market is going to expand very quickly. Now, there's other seasonal tendencies where we expect the market not to do anything, and they are in August and in December. Now, in August, it's summertime trading. There's lots of people that go on holiday. There's not going to be a lot of liquidity in the market at that point. You know, hedge fund managers, just your standard retail trader, the majority of people go away on holiday around that time, and there isn't going to be as much liquidity in the market as what there normally would be. So the algorithm that we taught in the last lesson, the algorithm isn't going to be doing too much. It's not going to be wanting to seek a specific level. It's going to wait until September again to then for people to start building in sentiment, start placing trades again, and then the algorithm can start hunting them. December, again, the same sort of thing. Mainly, so the central banks run the markets. They're the only people that run the markets. There's no smaller banks that run the markets. People say hedge funds move the markets. We cleared that up in the last call. None of them guys move the markets. It is the central banks on its own. Now, the central bank's main opponent is hedge funds. Hedge funds are counterparty to the central banks. Now, if when it's coming into December time, let's say a hedge fund is up 10%, for example, they are not going to then want to rush on a trade at the end of the year and potentially lose some of their profit. Yeah, guys, could you please mute yourself? Because I think other people are trying to listen and maybe being a bit too noisy. But yeah, so if a hedge fund is up 10% for the year, they're not going to want to seek new positions on and then potentially lose some of that profit. So if the hedge funds aren't in the market, they're not looking to rush trades on. The central banks are not going to be wanting to hunt them. So December can be quite choppy as well. So they're the months that I would advise you guys to avoid: August and December. And then when it goes into January, January can still be a little bit choppy because people are starting to get back into the market slowly. And starting to build up sentiment. And then February, that's when it normally just it cleans up and the markets start moving freely and normally again. But you can see here, using that seasonal tendency chart that we showed you with some of the concepts that we're going to teach you later on. Obviously, beautiful low down here, literally catches it almost to the pip and then it rallies from there. Now, how can we use that seasonal tendency chart for mega trades? Well, let me show you. So let's go back on that chart again and let's just scroll down to the Japanese yen. Now, as you can see here in March, this is the strongest seasonal tendency for the Japanese yen throughout the whole year. This one is the strongest one. It's look at it. It looks very quick, looks very sudden. So yeah, guys, can you just make sure you mute yourselves, please? Much appreciated. So looking at the Japanese yen, okay, we're expecting the market to have a sudden quick movement in March. This is the strongest seasonal tendency throughout the whole year. Maybe December, but personally for me, I would say this one is stronger. So let's go over to that. So again, I'm going to go on the Japanese yen futures. So this is just the Japanese yen on its own, and I'll mix this in with Forex as well. So again, we expect that rally in March, and we have March just over here. As you can see, we do not get any type of rally. We have nice sell side liquidity here. It breaks it. But then in the last example I showed you, we took out the sell side liquidity and we had come up. We had shown a willingness to go and rally after taking the sell side liquidity. If you look at this chart, it takes out the sell side liquidity here, and it just keeps on dropping. When you have a market that seasonally it's in the strongest period of the year, it is the strongest seasonal tendency for the whole year, and the market is showing you something different. Now, I'm not talking about consolidating. Personally, I wouldn't touch that market. But when it's supposed to be rallying strong and it's dropping heavy, it's doing the complete opposite to what it should be doing. It clearly shows that this market is extremely weak, because seasonally it's very strong this time of year. So the fact that it's dropping so quick and so fast, it shows that this market is extremely bearish. So if we can expect the Japanese yen to be extremely bearish, what we'd want to do, because we don't trade the Japanese yen futures market, we trade Forex. So we need to match it up with another currency. And what you'd want to do, so we've determined that this market is extremely bearish. So what we want to do is match it up with a market that is extremely bullish. And obviously, a great example of that is the dollar index. If we go on the dollar index here, you can see just continuously just rallying, look, just up since 2021. It's just been bullish, just keep on. Obviously, we've got these slight retracements, that's usual. But overall, I think we can all see this is bullish. So we've matched up a very strong currency with a very weak currency, and we have that seasonal tendency chart showing us the Japanese yen should be rallying, but it's not. It is extremely weak. So we can expect that movement to be explosive. So obviously, if we pair that up together and we go on USD JPY as a Forex pair, you can see this thing has been rallying. And obviously you can see March is over here, and it's just rallied ever since. And this is what I would consider a mega trade. You see how explosive it is. You see how quick it is. Again, you do have these slight retracements, but obviously you're going to get that in every single market. If you expect, a market to move this much and just go up vertical, I think that's a little bit optimistic. But I think we can all agree that if you got in the trade, let's say you didn't get in down here, let's say you got it around here or even around here, is that not good? Would you guys be happy with that? Guys, could you please mute yourself? But yeah, this is a market that is very bullish, and you can see why it was, because you're pairing it up with an extremely strong currency, and you're pairing that strong currency with an extremely weak currency. And the reason why we knew that currency, the Japanese yen, was going to be extremely weak was from the help of the seasonal tendency chart. Now there are other seasonal tendencies as well, and I'll let Ollie go over that now.
So guys, Jamie, if you want to make it so I can share my screen.
Oh yeah, I need to make you host, don't I?
Yeah, unless you guys know how to make it so I can share, Jamie can make it so I can share my screen without changing it so I'm host.
Oh, hang on, I think I have.
Host asked you to start your video. Right, share screen. No, I can't share screen. That's the video.
Oh, got you. Let me make you host then.
All right, nice one. All right, there we go.
There you go.
I'll share my screen. Well, yeah, so following on from what Jamie said, let's go over some examples of some mega trades. Some ones that are more you can catch, some examples so you can see it live on the charts. Again, it's all coming together now. Like, you'll start to see it. It can all come together, like what we're teaching. By the end of it, all the stuff like Jamie's mentioned, liquidity, words like that, imbalance, all of this at the end of a teaching, of the mentorship, you'll know all this and how to use it. So if we go back over here to 2019, October. So this is the October mega trade, October low mega trade. So this is the main one. October, so it happens in March and October. So this is on the S&P 500. So you can see here, we we had this in October, this form, and from there, like Jamie's explained, it just rallied, took up these highs, and it just continued from here to go, and until February, and then of course it gets ready for March. So it's on the daily chart, guys, by the way. So yeah, now it gets ready for March, and same thing again here. March, we know it forms a low, so it did take out that low there, so that took liquidity. So yeah, there would have been a nice entry. March, you just have to know when to enter, and this is where we're going to teach you putting everything together. But we'll get into that. So here's the next example. So March, and then we follow up, continue, then we take the high, and we keep going for the rest of the year, pretty much up till about around September. Then we start on a bit of down retracement again. Keeps going, come back down to here, and we're now at October again. So it creates another low, and then up we go again. Take that high out again, up till March, and here we go. Another entry again you can catch. So this is in March, and from again it rallies again. So you can see how just this strategy, just this one thing we've taught you, you can catch some lovely like trades. Like I think Jamie mentioned, like just this one thing. It's like if you catch them, just that move and just hold. Like, I know you guys don't want to be swing traders, but even this, like just telling you this information. That it forms in October and March for low. You know the bias then of what direction it's going in, and you can expect it to be bullish from them times of the year. And then again from October up we go, and pretty much all bullish candles except this one here. And then messy but choppy, come back down to March, and then we go again. Take that high out, back with confirmation for a sell. We can get into that. No, we haven't gone on to that. And then we get to this year, and October's coming. So be ready, guys. You may be able to, if you want to catch this yourselves this year, feel free. Personally, I think this low will be taken here in October, and then we can catch ourselves a nice entry here. That is my call. So keep an eye on that. And that's what we'll be looking for, personally. I will be. But yeah, is there any questions about that, guys? I want to apologise about my delay. The delay for the call today. It's it's kind of my fault, kind of not. There's not much I can really do about it. So I'm on holiday in Greece at the moment, and pretty much got fucked over by my travel company. We got here, and there was no room available at the hotel, so I had to sort it without all my travel insurance company yesterday, and I had nowhere to go, pretty much. For I was like fully booked and stuff. So managed to get a room now, though, guys. So it's all sorted. Jamie, is the quality fine? Because obviously I'm here. It's not the best.
Yeah, quality looks good, mate. I like it. Yeah, it seems to be all good.
Yeah, is there any questions, guys? But if not, I'm pretty sure that's all for what I've gone over. Or is there anything I missed, Jamie?
No, it looks good. So you're literally just expecting the low to form, around March, October time.
Yeah, October is the main one, obviously.
Yeah.
October low. Yeah, like I said, guys, look out for that next month. So we've not got long to go now. What are we, 17 days in? Yeah, 17 days. So me and Jamie will be catching this trade ourselves. Also, when we're talking about the indices, for the October low, there is always going to be a stronger one out of the three. So the Nasdaq, US 30, and S&P 500. So we won't, like I've said down here, like we'll expect to take out this low, and then we'll enter. It won't necessarily be on the S&P 500. If that makes sense. It might be on US 30, or it might be on Nasdaq. But yeah, we have to wait till a time to see. But yeah, I think that's all for me, and we'll go back to Jamie, and he's going to run over how to use open interest, I think, now.
Yeah.
So let's make you back host. Participants, more, make host. Thanks. All right, there we go.
All right, beautiful. All right, let me share my screen again. Okay, nice one. I really love that October and March low, guys. I mean, that is crazy. I mean, it really is.
Just that alone can change the trading a lot, can't it?
It can, honestly. I mean,
But obviously, it only happens twice a year. But if you're patient and just them two trades can make you a lot of money.
it can make you more than a job, that's for sure.
Yeah,
100%.
definitely. If you have 5, 10K spares per an account, it'll make you pretty much, oh yeah, a yearly wage.
Right, guys, let's go over the open interest now. So, let me go right to the start so you can see what I'm doing and how I get the charts up. So, you want to go over to a website called barchart.com. Okay, barchart.com. And then what you want to do, so I'm going to use the euro for this example, but this works again on the indices, the commodity markets, it works on all of them, but I'm just going to show it on the euro chart. So we're on the euro. Now, the months that you want to pay attention to are September, December, March, and June. So we're not using, the January, we're not using the November, we're not using the October. Them months they get skipped. So, what you want to be looking at is over here. It says open interest. You want to be using the one that has the highest number, because that is the one that's being used by hedge funds right now. So as you can see right now, the highest number is the December contract. Now we was just using the September contract, and as you can see, that number is still quite high. So we're switching over, and hedge funds will be doing this all around the world. They're switching over from the September contract to the December contract, and this happens every 3 months. So it'll go from September to December, and then from December to March, March to June, etc., etc. So let me go on the September contract, because this is the one that we was using, and you'll click full chart, and then you want to click study. Let me just go to that. Click study, type in open. Oh, can't spell. Open, and then open interest will come up. Click on that. Don't have to change any of these settings, just click add. And as you can see, we had a sudden, so when this sudden spike happened here, this is when we went from the June contract to the September. So when we was in, it was around around the 7th to the 8th, and then we switched over to the September contract. Then you can see it just goes flat, and then now we're getting into September. It switches over from September to the December. So you're using the December contract in September, if that makes sense. So, and then when we get into December time, it will be around the 7th, 8th of December. When we get to about that time of the year, it will then switch over to the March contract. Now, when you can see we changed over around the 9th of September. You can see this thing started dropping. So what I've done, and we'll get this chart up, is I've put a black line when we switched over from one contract month to the next. And as you can see here, so let me just change this, because that was around the 9th there. So this is when trends start to form. Now, we have a quarterly shift every 3 months in the forex market, in the stock market, in the commodity, like every market, it has a 3 month quarterly shift. Now, that can either be in the form of a continuation, a consolidation, or a reversal. So as you can see here, we're switched over. We're now in June, and then it starts dropping. Nice trend, starts coming down. Then we get into September. You can see this. Well, let me just quickly move this. You can see a really nice high forms here, and then you can see a nice trend down. Look at that. Now again, this can be used for swing trading, and it can be used for day trading. It's completely up to you how you want to trade, but you can use this for both styles of trading. This works beautiful with. And then here you can see we get into December, and obviously, as I mentioned earlier, December is a time when you want to be away from the markets, and as you can see, it's not the cleanest. Yeah, we have like, a few rallies and drops in here. Nothing exciting. It's not really going anywhere. Nothing like any of these. And then we switch over again. Now we're in March. Rallies a little bit, and this retraced into an impulse block. Right, if I zoom in, I can draw it out for you guys. Um, right there. And let me just change the color of this. So we retrace into an impulse block, and then as you can see, we have a nice trend. Then again, here we turn into June, and we have, because we've already retraced up into an impulse block here, and then we have a nice drop, a little bit of a retracement into an imbalance in here, and then we have a nice sudden drop again. And now we've just switched over into the September contract, well, to the December contract in September. And as you can see, we've retraced up, and now we're coming down. So I'd expect euro to come down because I'm bullish on the dollar. So you can see how the open interest, it creates these really nice swings and movements in the market, and it kind of tells you when there's going to be a trend. But then obviously when we get into the time of the year where we don't expect a trend, you can see it's very choppy, very messy, and you're not gonna want to be trading that. I mean, personally, I would go away and just enjoy myself over Christmas time. I wouldn't want to be trading this. But look at these ones. When you look at these and you compare it to this, I mean, look at these. Look at these. You know, they're the sort of movements you want to be in when you're in forex. They're just clean. They move very quickly, and it's just beautiful. It's really nice, and it kind of like gives you a little map on the charts, if you will, of like where these trends are gonna form. Um, a lot of people don't know about this as well, but it's kind of like a hidden gem, if you will. And it just shows you these really nice movements and how you can expect it before it happens. And when you line it up with the technicals that we teach you, the concept, like here, an impulse block, which traces up to that and then drops. You can put these things together. Do you guys have any questions about this, by the way? Is it gone over your heads? Do you understand it? How are you guys feeling about this? Do you understand it all?
Because it is a big, yeah, because it is a big call and there's a lot of information to take
Yeah,
in.
you've had a lot of information thrown at you today.
It's again though, it is going to be uploaded on the Telegram, and you will be able to watch it back as many times as you want.
So, do you guys have any questions? Obviously, if you can't think of any questions right now, but later on, similar to crypto. Yeah, so crypto is actually on the same algorithm as all the other markets. So, obviously, we mentioned about the algorithm in the first call. Crypto is on that same algorithm. So, the same stuff that we teach you about imbalances, impulse blocks, liquidity, how it retraces and balances, all this stuff. Crypto's on the same algorithm, so it moves the same way. It is manipulated as well. So yeah, crypto is the same. It's exactly the same. But yeah, if you guys have any questions that you can't think of right now, but maybe later on you're watching the video back and you think you have a question come to mind, you guys are in the Discord room. You can chat to us. We'll answer your questions. You can maybe share some charts. Show us that you're using this. Someone raised their hand. I don't know what to do with that. Just if you have a question, mate, just ask it in the chat. Love the class. Awesome, man. I'm glad to hear it. I'm glad to hear it. Yeah, we got some good stuff.
Yeah.
We got some good stuff. A lot of hidden gems out there.
Yeah, like you won't find this stuff on YouTube.
No.
or anywhere really. What trading app do you guys use mostly? MetaTrader 5 and 4 to execute our trades.
Yeah, they seem to be the most
Main
popular
one.
ones. Yeah.
The other ones are owned by brokers, really, aren't they?
Yeah, they're not that good.
They're owned. No.
But guys, also as well, watch this. Watch over here because obviously we've literally just switched over to the December contract now. So watch Euro USD here. I think it looks good. I think it looks promising. But yeah, if you guys don't have any more questions, I think that is it for the call. I know we've thrown a lot at you today. There's definitely a lot of information. I would suggest, guys, don't rush through it, and make sure you fully understand this stuff. There's definitely a lot of stuff that we've chucked at you today: seasonal tendencies, the mega trades, and all that stuff, and then the open interest as well.
Okay.
But yeah, guys, I think that is it for the call then.
Yeah, like Jamie said, if you have any other questions, put them in the Discord and we'll always get back to you. And you remember, like, you guys are all new and we had the students from last month's mentorship and they'll probably be able to help you with a lot of the stuff now as well.
Yeah.
If we don't get back to you. But yeah, we'll always get back to you all. And any questions, like Jamie said, show us some charts if you find any examples and stuff. We'll start doing that a lot from further on calls with more stuff you need to know to go over, keep practicing. We'll ask you to send screenshots in so we can say yeah or no and to help you with why is wrong or if it's right, and we'll say yeah. But yeah, we hope you've enjoyed the call, guys, and I'm going to enjoy the rest of my holiday, and we'll see you next Wednesday.
Someone said, can you reshare the link for the class 1, the Discord also? Wait, what do you mean by that?
For the Telegram, I think you means.
Oh, got it. Yeah, I'll share. That should be in the mentorship updates group.
But yeah, I've been Ollie, and
I've been Jamie.
And we'll have a good week, guys, and the rest of your weekend, and we'll see you on Wednesday.
See you guys.